Large dark pool transactions. Wall Street seems to be up to something very sneaky right now, and we need to discuss it in today's video. We'll be looking at the key leads, the biggest indicators around the world that are showing us some bad signs, and of course, the good, the bad, and the ugly. But more importantly than all of this will be the opportunities. As yields go back up, we know that this means the market could be setting up for something big. Also, a data stat that has a 100% track record. That and more coming up in today's show as we discuss stocks, commodities, and cryptos together. See you soon, guys. This will be a good one. Well, welcome back, everybody, to The Daily Show. My name's Tom, and in today's video, we have a lot of macro lead indicators and, of course, hot charts to be bringing your way. If it's your first time here to the channel, then why not subscribe, smash that bell icon, and of course, give the video a like if you find value in today's video. And I'm sure you will, because there is a lot of great data for us to cover. Let's look at the first story, though, a very rare signal that you may not be aware of. A new all-time high was reached in September of this year, and of course, we didn't see that traditional sell-off that you tend to get in this period of time. Now, this actually hasn't happened that often, but when it has happened since the 1950s, every single time, so that's 100% of the time from this particular stat alone, we have seen overall a bullish end to the end of the year. Now, sometimes it's been just a little bit bullish, but sometimes it's been pretty nice. And the thing that I look at here is there's two kind of ways to look at it. One, yes, it's been bullish, but two, the drawdowns have actually been relatively big when it comes to the next 3 months, with pretty much an average somewhere around negative 4% at some point in time happening over that period. Now, if you've been watching the channel recently, we've been discussing the idea that there could be a 4%-ish sell-off coming very soon. And it looks like a few other banks are starting to join in on this. And I guess they're looking for getting into the market at cheaper rates. Because of course, we know that in general, they've been chasing some market areas. And we've seen this represented in price and of course, large dark pool activity. Why? How amazing that it turns out that hedge funds have been net buying US infotech at the fastest pace in 5 months. If you've been watching the channel for only a couple of weeks, you would have seen about a week and a bit ago, we talked about semiconductors getting some massive transactions on them. Obviously here, we love NVDA, and NVDA has been absolutely blitzing on the TA. But look at this. These particular net buys were led by semis and semi-equipment manufacturers. And this just shows you once again, things like that ASML leak were all opportunities for Wall Street to get in on cheaper prices coming into this earnings season. Now, on the flip side of that, we also have some banks saying, hey guys, we're pretty worried about what's going on in the markets right now, and we expect potentially negative 10%. Now, I've called or seen this called a lot of times now into the end of the year. And it's our belief we won't see a 10% pullback until 2025 here on the channel. But you can see that Citi says US equity exposures are hitting levels that preceded 10% slides in the past. And the last time we saw this was mid-2023, where basically it took 63 days for the markets to pull down and then 24 days for the bulls to get it right back up. Effectively a huge V-shaped reversal. Now, this was one that was pretty nice for market participants back in 2023 when we were making the channel, but there are some valid reasons behind Citi's call. As we've talked about with Mark Newton's work here and some of our own work on the channel, we're starting to see signs of an overbought market, a market that's confused coming into earnings season and really is going to rely on earnings. And as we'll see, yes, market is being upgraded, but if it doesn't meet expectations, it could cause a little bit of a flash sell. Now, there are some other signs of weakness starting to come through the markets. In particular, what about the Sp500 advanced decline dashboard here from Grant Hawkridge? You may notice, guys, that this is pretty wild when you look at it. Effectively, most stocks were down throughout the Monday session, and this is the Monday session, but it's leading us to believe that breadth is not all that healthy. Financials in particular and real estate companies were down almost 100% across the board. And this is the type of breadth that you start to pay attention to when you're seeing it in a consolidation range. And of course, the market's been trapped now for quite a few days. Now, would this make sense for our long-standing kind of analogs here with other market kind of bull periods? Well, it does in many ways. When you look at it versus the 1960s period, we're kind of due for that little pullback into strength. And of course, in this case, we ended up getting more of the 10% pullback during what would be equivalent of April, May of 2025. We believe it could be coming in January though. So of course, there are quite a lot of stats that we'll need to look through into the end of the year. However, this is a big case to be made, and I think it's a very important one to look at. Now, for long-term investors, if you haven't watched our weekend video, which was 2 videos ago now, definitely go back and have a look at that. We discussed the lost decade, the concept of a market participant basically maybe seeing a bubble that happens here into 2025-26, and then effectively a oversaturated market that then has lackluster returns for quite a period of time. Now, Goldman Sachs and many other banks over the last couple of years have been discussing this. But the reason they talk about it is because when we get up to these really high multiples, we tend to know that these high multiples end up in kind of lackluster returns across the board over the next 10 years. It's something to keep in the back of your mind. It's not something to be terrified of right now, but I would still consider it. Now, we talked about inflation. At the moment, people are seeing yields go up as we've got a big difference between the Federal Reserve's expected cut rates and, of course, the market where it was expecting to cut at a higher rate. Just remember, if inflation stays between around 2 to 3%, which is a very good level for it, and it's about where it is right now, this gives the best annualized returns on markets. So as long as we have momentum in our favor, as long as we're seeing basically greed take over and debt levels rising, in general, this is the type of market condition that you have to think you're in over the next 12 months. And we've been arguing that for quite a long time. Remember that analog before still has a way to go if bull markets are going to enter their standard average over time. Now, the Sp500, is it overpriced? We get this question all the time. This is an interesting way of looking at it. Was it more overpriced in 2021? Well, the answer is quite simply yes. And back then, of course, we had companies that make no money being some of the leaders. Over here, we do have companies that make a lot of money, and there's no doubt that they are still probably overpriced by long-term metrics, but you must remember this is what's happening in the market. Now, where are the big stocks? Well, I think by market cap here, you can see 24.7% of stocks are now valued between 30 and 35 forward PE. Now, you don't have to be a rocket scientist to understand which stocks these probably are, but in general, you can see most stocks are between 15 and 35. So this is the general kind of market participation in terms of forward PEs, and it's where we would usually expect the majority of the market. Now, if you look at by number of stocks, 15 to 20 is where most of them are overwhelmingly being. And this is actually not that overpriced by metrics. 15 to 20 is actually pretty normal. It's these ones here, which as we know are the Magnificent Seven and the larger stock market particular participants. So why is this all important? Well, could we be playing catch up as this bull market extends? The idea that maybe the Russell 2000 sees a sell-off into strength is, of course, a seasonal one. And we've been talking about this into election day in particular. We saw some selling in recent 2 days, which actually is where we tend to see the most amount of seasonal weakness. And then you usually see strength into the end of the year. So with price action doing what it's been doing, and we'll talk about that soon, it could be a pretty good time for the Russell, in fact. And remember, it's all going to be about timing, price, and seeing that momentum come through. Q3 reporting is obviously on its way. We are in the biggest week at the moment, and we're about to see Tesla, so make sure to look for that. And as we know, operating EPS is being upgraded by the street. With the big move, it's probably going to be Tesla this week. Everyone's eyes will be on aftermarket earnings. Tesla plus minus 6.2% on the options is one of the most important. And then, of course, we move through and there's plenty of other stocks to be looking at and opportunities. But it comes back to quite a few different asset classes. On the channel here, we obviously cover not just stocks. We talk about gold, we talk about silver, and well done, by the way, silver traders. What a fantastic second TP zone over the last 24 hours. An absolute behemoth move there from silver. But a lot of people are bringing out gold is going down or gold is basically going to underperform. Now, this is a time like no other for gold. It's kind of rare to go into these situations. But as you'll see here, when you get reads similar to this, you tend to only have 1/3 of the percent of the time that gold will do well. It's our belief that we are in a unique period for gold. So although the statistics here are very bad towards gold over the next kind of 6 months, we don't think it's going to be this bad. In fact, it looks still pretty underpriced. And remember, there are strong other external reasons than just technicals that are pushing that particular metal up. Now let's talk dark pool transactions, because Wall Street has added again a massive dark pool transaction coming in over the last 24 hours. And it's intraday as well. So something we need to be considering. Now, these are pretty rare. The last time we've seen ones that run intraday like this have been during December 2023 and of course January 2022 OPEX weeks. Both of them were OPEX weeks. In both cases, we either saw sell-off or a pullback in time. It's definitely food for thought, and of course we'll be needing to look at some price action in a moment. We also have some other large transactions coming through. Barber, look at this. Someone probably purchasing up after the initial pullback from that huge rally. It again is strengthening the case for Chinese stocks to be doing well. But probably one of the ones I saw out there that I thought was very interesting, or probably the most interesting, was what I have to believe is the close of a large financial position into this earnings season. Notice over here back in March, someone placed a very large transaction. Well, it just so happened that around the same size transaction just was closed off, or at least entered into the market. Now, this could signify a TP zone. And if that's true, then someone has just taken profit on some financials. And of course, we're starting to see weakness in the financials and weakness in the home builders, which I do think is quite interesting. In terms of other big transactions that went on, we saw some huge transactions recently in coin, and we do know that coin needs to breach this level, which is similar to, of course, where Bitcoin is. If we look at Bitcoin later on today's show, which we will, we know that once it gets out of this consolidation, if it does break up, all of these will actually be buys. So something that's very interesting. At the moment, it's at straight resistance, which you can see there. And then, of course, treasuries as well. 3 large transactions all around current price. They're starting to cluster it up. And as they do this, as we build structure, treasuries could be an interesting point for position-based traders and investors. All right, let's move over to the rotation, the flow, and then we'll talk about some of the big options at the moment. And let's go into, of course, the movements here in the markets when it comes to sectors. Home builders got destroyed. Now, this is off the back of some large dark pool transactions, and home builders are getting smashed. In fact, now they're the worst performing market over the last 5 days of trade, while gold has become the best performing market along with metals. And yeah, this is a very different makeup when it comes to markets and participants. Notice here though, the home builders and the regional banks are down there in the lows. And of course, if that keeps strengthening, it can show a potential little pullback is occurring here. Does it mean that there is significant weakness and everything's going to crash? It's our belief that that is not true. So at this stage, it's still all-time ups and everything looks pretty good, but it could be a little bit of room here for a correction. Now, I went over to the Sp500 and I put on the net delta for the days, and you'll notice here there are more negatives than positives as we now approach these highs. 1, 2, 3, 4, and 5 negatives, and 2 overall positives. So there's 1, 2 when it comes to those. Now, this could be showing us a form of distribution, and as we know, we've had 2 large dark pool transactions on the SPY alone at these levels. The Russell, also the Dow, and also the Qs have all seen these large transactions going on. Now, it's most people's expectation that we're going to push to 6,000, and I don't blame them. Of course, the price action right now looks pretty good, and in terms of medium-term hold, you've seen the stats. During a month where, like September, where we make an all-time high, the stats are that we will move forward and we will continue to grow into the end of the year, and that's great for the medium-term hodler. For people that aren't in though, or traders looking for key levels, we know the key zones are going to be 5,800 and 5,700 moving forward. And remember before we discussed the idea of a 4% pullback? Well, let's take a distance here from here to here, and you'll see that's around 3. If we drop down to 4, that would be around 56.30. So will the options market allow this type of thing to happen? Well, at the moment, the main 2 key levels are obviously these 2 here, and these have the best supports on them. We still haven't reached this key level just yet. This would be where I think day traders will sit though this week, especially maybe post Tesla earnings, to see what happens there. When we have a look at the options, it makes sense exactly to these levels. Take a look at these puts starting to roll in. So obviously people are trying to bet on bearish market action, and you can see it very clearly here in both the 23rd and the 24th of October. Look at the 5820, 5800 strike. It's kind of comical, really, that people are trying to short so hard into this market, because while we might think there's a pullback, you're not going to necessarily predict like that. And if you do, you're going to lose a lot of your money a lot of the time. This now becomes a put wall, and it looks like markets could be still kind of chugging along in this range. Now, of course, if 5800, 5700 did get breached, the most likely level next is 5700 flat. And you can see here why that reason would be. It would go into negative gamma and the market would start to push on itself. On the top end, about 58.60 to 58.50 is really where the keys are. And if this is to be correct, the best profit for the market so far would be to keep the market in a choppy style, basically sideways for now, and then potentially push it down when these puts disappear in the next couple of days. If we actually go to the 31st of October, you'll notice that puts are historically sitting around 5,700, which is that key strike, and that there are a lot of calls built at around 58.25 to 58.900. And this is, I think, very telling when you look at these market conditions. Now on Tesla, it's anyone's game. As we know, the markets have remained trapped now into earnings, and that means that we're in a coil, which we'll look at in a moment. And when we're in a coil, we tend to be looking for a large move just on the horizon. Something very interesting and, of course, worth paying attention to. When it comes to NVDA, well, it's in positive gamma. So for now, strength upon strength. There's no reason to really be against this market, and it looks like it's trying to go towards 150. That's the major strike. And of course, as long as the market will remain bid, and we know that big hedge funds have been trying to buy these semis into earnings season, that at this stage, it's all kind of like on the bullish upside. And that pullbacks, if they do occur in markets, will probably be met by bull demand. Let's now take a look at other big key lessons in the markets. First up, we'll look at bonds. Do we see failings in the bond market? No, it's a simple answer. At the moment, bonds don't seem to care too much, and this is a net overall bullish thing, especially if markets sell off for reasons of bad earnings, or they sell off for reasons of maybe yields going back up and the Fed not giving enough cuts. They would be, I would say, false reads in terms of why the market's pulling back, but bonds do not seem to be concerned. Home builders, on the other hand, are weakening. Now, the overall trend is always important to note. Are we really weak? No. But the temporary market action does seem quite bad. And of course, with this being a pretty classic Wyckoff style setup, it kind of points to further weakness in home builders and pullbacks to be met by sell demand to push down to maybe a 112. Now, if that happens, we may see an overall kind of turning of the market just for the temporary point. And of course, that is probably driven by yields mostly, and the fact that home builders are a bit sensitive towards those. When we go over to treasuries, you can see here that treasuries have also been sensitive to the yields, and they're sitting between that 92 and 90. We're starting to see a build up in buyers though around here, or we have to assume are buyers. So that's a good sign. Dollar index, well done. Very close to the 104 now, guys. Again, the trend is your friend in this case, and it has been continuing to go up. And a lot of people have been trying to short the dollar. Not a good idea. You might think it's overboard, or maybe it's too high on the indicators or something like that. Just remember, it's pushing towards this supply, and this is kind of what we expected. Copper, on the other hand, doing pretty much the right types of things. We really want to see a closure on the daily above 441 now, but nice setup there. Absolute classic. You could have even had a 3-to-1 out of this trade actually, but classic kind of buying to go through here on copper. Need it to hold, obviously, the low. It's early days still, but it is looking a lot better. Now, has gold hit its temporary peak for now? I think it may have for now. I'm, of course, not going to sell off the longer-term holds that I've got. Why would I? But at the same time, if you look here, silver just hit the second TP zone. That was a phenomenal move. And while I still think silver is going to $49 an ounce over the next 12 to 18 months, we're starting to upgrade our silver calls here. In general, this is an amazing position, and it's the completion of that beautiful inverse head and shoulders. Look at this. Absolute perfection on TA. Multiple reasons to be taken into here. I've got to say congratulations, guys. Well done. We've been calling silver here for months and months and months, and yeah, it's a culmination of your efforts. So this just proves that, again, we know that back here especially, people were absolutely ragging on silver. And I mean in the comment section. Some of you were very against this metal. Oh, it's lost decade. Oh, it sucks. Oh, it's the worst performing sector asset class, blah, blah, blah. As a trader, you don't really care. A trader is going to be looking at it from a different perspective. Can I get the right risk reward out of this position? As an investor, you've got to consider, where is it the time now for silver to perform? And that comes from a strong macro base and obviously a very, very strong thought process behind the fundamentals and, more importantly, the cycles of these particular metals. You must understand those. If you do, then you will have edge in markets. US oil is pretty cool. Nice movement up here. Obviously, first signs of strength on the small time frames. I'm liking what I'm seeing here on UK oil and US oil, and it looks like some bulls have tried to recommence. So oil certainly could be where the interest is at. Then there's Tesla, and Tesla remains trapped into the event. Wow, I'm interested to see the way it moves. Obviously, if it does gap up, that could create further strength into 238. And why could that be? Well, of course, in this case, it's all about earnings. An earnings catalyst either way is going to push a big move because it's now been sitting for quite a few days on this market. NVDA breaches, again, new all-time high. Very nice. We know big funds are buying it. We've shared that data today. And in general, it's pullbacks to be met by bull demand by semis. If we have a look at Chinese stocks, they're trying to break to a new high here. Little day trade would have been okay so far. We'll see whether it can get a new high. We do know that with Baba, we have had some large transactions come through. And again, it's just kind of strengthening the case of somebody's trying to position. It doesn't mean the low's in yet, but someone's trying to position before the inevitable Chinese stimulus packages get released at some point. Now, if we move over to the major markets, the Dow obviously showing some weakness this week, continuing actually to the weakness side, sitting onto support near the close, but not really finding the strong bid. If we move over here to the US 2K, again, quite weak this week. These are the worst two of the market indices, sitting on the daily 20, not down to that kind of question mark bull level just yet. So it's an interesting one. Now, the Nasdaq looks pretty good on the price action. If you actually look at it, you've got two wicks towards the upside. We've talked about how there's a bull and a bear case here. We're sitting at the bear level. The bull level is literally right where that alert is, because that's also where I think the market goes more towards the bear side. And you'll notice where it's buying off. So this market is confused. I can make a case for both. That doesn't mean you necessarily want to have to trade the both. I sometimes like actually doing that, taking a long and a short with a big move on their horizon. But obviously, if we close through 20,470, we're probably going to reach 20,600. So you can't discount that that is possible. So Sol continues to be better than ETH. As you can see here, another good 24 hours from this particular combo. And yeah, Solana seems to be the real deal. Most people are jumping on that over ETH. And as that happens, Bitcoin, of course, is just going sideways. This is absolutely fine. It's what you have to expect, a pullback in time, possible correction down to 62.8. I'd like to see it hold there and move forward, or consolidate and move forward. I think this is a 2 to 3 month kind of position. So really, you've got to look at it from what are the stats? What is the price action doing? Is it improving? And all the answers are currently yes. So we continue to watch here. And we do know that Bitcoin needs to usually destroy people's mindsets before making a big move. So yeah, that's why it's doing what it's doing, because it needs to convince everyone that Uptober is cancelled and there is no November or whatever else that people are coming up with. Effectively, this is the game that Wall Street plays. When you least expect it, the market's generally going to go. In terms of big news, it's really just PMI this week along with earnings. As we know, this is the biggest amount of generalized earnings. And then next week, we see the big tech stocks come through, which will really push the markets. And as always, that means that if you subscribe to the channel, we'll be covering them all together. It's been a great video, guys. I hope you have a fantastic day. Make sure to follow us over on X. Also sign up for any of our free stuff if you're interested. And if you want to know more about, of course, how we replicate certain positions, or you want to understand more about cycles, check out our day trading or advanced masterclass. I think you'll very much enjoy them. And they're a culmination of what I've put in effort here over a very long time now in markets. So I'd love to see you in those. Otherwise, you have a fantastic day. Bye for now.